Hello everyone. Thank you for joining us on Method to Madness by Beyond MF. Today we have a very special guest, our numbers guy, if you will. We have Mr. Gaurik Shah from Mirae AMC, who takes care of the Platinum SIF of their SIF universe. So, just to give a brief about Gaurik Shah, he has close to 2 decades of experience in quantitative research. He was previously with RBS, he was with ASK, he was with Avendus as well, right? So we're very happy to have him over here. Thank you so much, Gaurik.
Thank you.
Thank you. So just to start off, right, this whole SIF has become kind of a trend, or rather kind of a rage right now, if you will, right, in the overall industry. But then I would say not a lot of people have a good understanding of what works in SIF and what exactly SIF is. So what is the thing that you would put, where would you put SIF over AIF and MF, right? So people know about AIF, people know about MF. Where do you put SIF over MF and AIF as such?
First of all, thanks Ganesh for having me here, and it's my pleasure to be here. Okay. Okay, so one thing, it's nothing over something else. Okay, it's not SIF is over MF or SIF is over AIF. It's another flavor. It's another tool in your kit. Okay, to play around with. Play around with probably is not a right choice of words, but it's another tool. It brings in another table. You think like, you have a Indian thali.
Right.
Okay, you have rice, you have roti, dal, sabji. You also have sweet. So everything has its own flavor. Everything brings something different to the plate. So like that, SIF is something is not to be seen as something over MF or over AIF. It has something distinct features. It has some more flexibility. So it has to be looked in that context. You can't think in terms of okay, this is better than MF or this is better than SIF. Now investment in India has evolved. Investor in India has evolved. We are not thinking in terms of this versus that. What is the requirement of the portfolio? Portfolio requires everything. Portfolio requires a part of portfolio requires to be aggressive. Part of your portfolio requires to be moderate. Part of your portfolio also requires stability. And within SIF also, there will be different types of SIFs where something could be more aggressive, something could be more conservative. It does have more flexibility compared to mutual funds. So that's the main advantage. This is the first time mass affluent segment has access to this kind of strategies.
Right.
Earlier they did not have that. So mutual fund typically will have a more of a linear return profile. With derivatives, we can bring a structured risk to the table.
Right.
That was not available earlier to this segment of investors. Now for the first time, SEBI has made it available. Okay. So that's main part. Right. Against the AIF, there is a distinct advantage, is tax advantage. So that is something which is main thing. Then there is always tax efficiency. People trust mutual fund more than AIFs. They have been investing in mutual fund for us. Yeah. So that's what I said.
Got it. You touched upon a main point, Gaurik, on the fact that it has been accessible to the retail.
I won't call exactly retail. It's still it's a mass affluent segment, we call it. It's not over time probably they may be made available. Once people become more mature, once people become more I would say there's going to be learning curve for this. I always say this is learning curve for investors, learning curve for the advisors, learning curve for the AMCs, even for us who have been doing these strategies for different structures for last 20 years. There's going to be learning curve because this structure is new.
For you guys also.
Yes, with structure, your limitations come different. Your expectation and returns, expectation and risk is different. So there's going to be learning curve for everyone. Then it's going to be a journey. I'm sure for it.
Got it. So what would you typically say? So someone who has, let's say, a 10 lakh or a 20 lakh or let's say a reasonable sum of money, who's interested into buying into a SIF, right? What are the kind of check boxes that they need to tick? Because not everyone can understand SIF very easily, right? Like you rightly said, it's a journey, even for you guys, even for the general public, correct?
So if you don't understand it, don't absolutely. Means for all the, and SIF, a different SIF will come out with different strategies. With derivatives, you have quite a range of strategies we can deploy depending on your mandate, depending on what you want to achieve. Every strategy will have its different return parameters. They will have a different risk parameters. Some of the risks may not be apparent for a long time because those are non-linear strategies. So one has to understand the strategy more than I would say even fund manager. It is strategy which is going to be more important over here. And once you understand things, you want to take that risk. It's not, again, risk is not about being low risk or high risk.
Correct.
You are going to have a structured, different kind of risk over here, right? So that one needs to understand it properly.
Gaurik, now coming to you, right? So you're a numbers guy and you've been in the alternates side of things, right, in the industry. So exactly how did this transition happen to SIF? Now, I understand that SIF involves a lot of, or rather SIF is typically like a hedge fund for who operates it like a hedge fund typically, like?
I wouldn't say exactly hedge fund. Hedge fund difference, it has a long way to go before it reaches there probably. Flexibility is a lot less in SIF. In SIF, headline number is you have a 25% short. The only, in a way, only difference between let's say long only mutual fund and a SIF is that you have the possibility of having a 25% short positions.
Understood.
25% short positions, it's going to be difficult to have a substantial hedge. First of all, one has to understand that it's with the short you are going to reduce the risk, right? You are not going to increase the risk.
Absolutely.
That's because 80-90% of your risk in the portfolio comes from the market.
Correct.
And once you short, and we are talking about a diversified portfolio, we are not talking about 2, 3, 4 positions.
Correct.
Then your overall risk is going to be reduced. So that is something one has to understand, and that's the first myth buster I would say, because when the SIF came, the thing was that it's a AI hedge fund. There was one of article I had authored, and there was some yesterday. I was just looking at some comment, and they said that SEBI has given you a T20 pitch, and you are playing a test match. I said no, that's not a T20 pitch. That's not a T20 pitch for sure. So this is a low. In a way, it's going to use to reduce the risk. And more importantly, it's going to be used to structure the risk. Some of the strategies which we have been deploying over a lot of time, over different structure, we have not been able to do it in mutual fund. Now we have that opportunity to give the access to those kind of strategies to a mass market.
Got it.
Now the question was why.
For you, you had.
I was part of AIF before I joined this. So AIF always had this major issue of tax inefficiency, and this is a newer opportunity, a newer challenge. I like challenges. You keep on learning. You get different problems to solve.
Absolutely, yeah.
So it's going to be. I'm looking forward to it.
Wonderful, wonderful. Now again, see, you have a lot of international expertise as well, right? So how is this going to help you leverage these capabilities while you were in Mirae? Why Mirae also in any way? Yeah.
Mirae is why Mirae? Mirae has been a brand or a team which has created a niche for itself. Okay, the equity team under Nilesh sir, the overall mutual fund team under Swarup sir has created a different niche for itself. So what we are looking for, what I liked about Mirae was they are talking about a long-term product. They are not into the business of asset gathering. They are into the business of asset management. Over the years, I have worked with people who is, the approach is this is what is hot in market. Let's try to access it. Okay, and try to increase the AUM.
Right.
But then ultimately, that's not the approach which will a sustainable approach, because ultimately for the sales guy, just you sell it and done with it.
Correct.
For the asset manager, it's more relationship which is important, right? Not just about getting the investment. You have to keep the investment. That's where the hard work is, and that's the approach for Mirae, where you go with the products which have a long-term sustainable model. Yeah, exactly.
Wonderful. Wonderful. Gaurik, on the product as such, right, is a conservative hybrid, right, to be exact. So my question is, since you mentioned that a lot of people question, okay, you got a T20 pitch, but you're playing a test match type of a thing, right? Coming back to your anecdote. So with that in context, do you think this is the only way to play SIF, or why choose a conservative hybrid?
No. So this is not the only way to play SIF. There are going to be a lot of different people are going to attack it from different angles.
Mirae attack it from conservative hybrid. That's good. Yeah.
We thought that this is the way in which you can give the best value addition to the client's portfolio.
Correct.
Client has access to right now mutual fund products right from the arbitrage to small cap. Along the risk spectrum, it's there. Everything is there. We need, with SIF, we get certain flexibility. So we have to leverage it and give it something which he did not have access to, which adds value to its portfolio, right? So in that way, this particular product leverages certain strategies. What we will talk about, I think collar strategy is one thing which we have kind of selected for this thing, and it has that ability to give a structured risk where it's non-linear returns, where we have a better upside participation and a better downside protection.
Got it.
That's what we have kind of worked on over here. Yeah.
Got it. On the specific strategy of the fund, right? If you could elaborate with an example, it'll be great, for our viewers.
So, this particular fund has 5 building blocks, what we'll say. One is collar strategy, arbitrage strategy, special situations. Then there is a fixed income part of it, where there's a credit portfolio and there's a liquidity portfolio, right?
Okay.
70% of the deployment will be in the arbitrage strategy and collar strategy. Okay. There's one thing which the listeners will have to understand is that when we are analyzing mutual funds, we are generally analyzing based on the deployment, right? How much is the exposure, equity exposure, how much is your debt exposure, within equity, how much is your small cap, large cap, mid cap, that kind of thing. With SIF, one will have to start thinking in terms of strategies. What is the strategy? Which are the strategies you are going to deploy? What is going to be the weightage of each strategy? Because deployment could be in equity and debt. So, for example, in AIF, your typical deployment for AIF Cat 3 would be 95% in liquid fund,
right,
5% in cash. That's a cash deployment.
Right.
But the risks they would be taking would be different, because futures you don't need futures you don't need that cash deployment.
Yes.
So one will have to start thinking in terms of that. So here 70% will be in collar and arbitrage. So idea is, when the markets are good, you deploy more into the collar strategy and less into the arbitrage. And when markets are not in a good phase, where markets are kind of falling, downward trending, then we move more towards arbitrage and save defend our fund. Okay, and less deployment to the collar strategy. After that, there will be special situations, which is basically a return maximizer. If there is a trade available in the market where I can increase my returns, or I can have some extra returns added to my fund, I'll take it.
Okay.
Right? There are trades we have been doing. Again, those trades we have been doing those trades for the last 20 years.
Right.
To give you an example, there could be let's say merger-demerger trade, where there is merger announced between two companies which are listed. The swap ratio is announced, and the market pricing currently is not exactly matching that swap ratio. So you have that opportunity to get that.
So you calculate the sum of the parts and then get it done. Okay, got it.
So that's again those kind of strategies we have not been able to do in mutual fund, because mutual fund shorting is not allowed.
Right, got it.
So that kind of strategies we would be deploying over here.
Understood.
Then there is fixed income. Within fixed income, there is core credit portfolio, which will be again, it will not be too conservative, but it will be not too aggressive as well. So the idea over there is to have an accrual strategy and deploy in the good credit quality papers. Okay. Currently, in that we will have 0 to 3 year duration papers, but that could change with time. I'm not keeping it fixed. There could come a time where we seem to be on the peak of the interest rate cycle, then we would probably increase that duration, but currently it's 0 to 3. And then there'll be a liquidity portfolio which we need for our cash management.
Understood. Got it. Gaurik, for any product, right, there would be an objective, right? See, because if I'm an investor, I need to understand, okay, what kind of objective are you fulfilling to suit my needs? So what is the objective of the fund? Who should actually invest in Mirae Platinum SIF?
So I will not say who to invest in. There is obviously objective of the fund. As I said, the objective of fund is to be a conservative.
Right.
Over a period of time, it should generate alpha over the conservative options available current in the market. And as I said, there is a slight amount of risk which has increased, which will, like, for a 2, 3 months, 6 month kind of period, you can see a subdued returns.
Okay.
Those are flat. Currently, what we are comparing with the flat return products, like arbitrage is a flat return product. So compared to that, when the markets are bad, this product will see some subdued returns. But then when the market turn around, it will definitely see a much better return. So over a period of time, it will have a much better return, and the risk is quite moderate, right? So I look at it this way, that be it corporate, be it individual, there is always a conservative side of portfolio, which is basically a float kind of thing, right? Which they keep for stability. Okay, for I won't say emergency exactly, but there is some need might arise. So we always keep certain part of the portfolio. So in that portfolio, that part of the portfolio, this is a perfect fit, right? You are taking some moderate risk on that, but we are not talking about big numbers over there. Okay.
So typically, what should investors expect from Platinum SIF, Gaurik? I mean, just to sum up, right? Maybe to say in a few words, this is what Platinum SIF does for you, if you could.
So Platinum SIF as a brand, we okay, this is a separate brand. We hope to deliver value added product to the our investors, where they get some distinct advantage over the existing products. We don't want in a way a product to be me too product, just to bring it to the table. We have enough products in our stable. Within Mirae, we have a list of products. Okay, so with the SIF, we will kind of leverage the flexibility which SIF offers, and bring to the table the products which have a distinct value addition, and where we think that current products cannot fulfill those needs. Like so with this particular hybrid long short SIF, we have identified that gap where we could add a significant alpha to the conservative part of the portfolio.
Right.
Similarly, over a period of time, we will come out with the products which have a distinct edge.
Understood.
Okay.
Understood. Got it. So what you're trying to say is these products are effectively going to complement each other and not going to be me too products.
There are enough products in the market. Currently, we were just discussing that right now in Indian markets, especially in mutual funds, number of schemes are more than the investable stocks. Right? So there's no point in coming out with something which is already there.
Correct. Right.
So yeah, with there it is, we can deploy different strategies,
Right.
which will give you different kind of risk. As so in a way, this product could be also thought of in a way that it defends in a difficult time, and in the good times, it also has the participation on the upside as well.
Wonderful. I think, like you rightly said in the beginning, we still have a long way to go.
Yeah. Yeah, thanks you guys. You have a big role to play in this, because investors will need to educate. I am sure there is a lot of learning, there are a lot of changes in thought process, the strategies which are considered to be the all-weather strategies, they will also see some ups and downs. And so one needs to understand that risk. It's not that a strategy is bad or good. Okay, strategy works on underlying market conditions, and no one has any handle on that. If someone says that no, we know that this is how the market is going to behave, no one knows. No, they're not bluffing. It's not
Possible.
It's not possible. You don't know when market works in cycle.
Right.
Okay, that probably is more or less fixed. Market, there is ups and downs in market. There is a phase in which this particular kind of stocks work or this kind of strategy work.
Correct.
But no one has handle on how long this phase is going to last, right? Some cycle lasts 7 years, some cycle lasts 2 years.
Correct.
So it's going to be based on that.
Absolutely. Thank you so much for being very patient and answering all the questions. I think our viewers will have a good sense of what an SIF does and what specifically Platinum SIF brings to the table, right? Thank you so much, Gaurik.
Thanks a lot, Ganesh.
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।